Alrighty, welcome in. It is another Monday and another week of absolute crazy volatility that is about to occur, or completely nothing. Uh, it's gonna go either one of those ways. I'm gonna kind of go through everything and then we can take it from there. But you guys know this is not new, or it's not new information that this coming week is a massive earnings week. And with earnings weeks, you typically are, you're just focused not really on playing any of these earnings because we all know that earnings can be a very volatile time. You could have a 50-50 scenario almost all the time. And while some of these you might feel like, oh, I'm really confident that this company is going to beat earnings, that may be true. They might beat earnings. But as I always say, the CEO, CFO can come on to the earnings call and completely obliterate whatever thesis that you had by just mentioning anything out of pocket, right? So that's why we always say earnings are a terrible time to speculate. And this week you have every single big name, right? You have your Visa, PayPal, you have your Microsoft, Meta, you have Apple, you have Amazon, you have so many big companies reporting this week. So you don't really want to be taking unnecessary risk this week, especially as a trader who's trying to grow a small account. This is not the week where you will want to take excess amount of risk. Okay, you have to really, really try to control yourself this week because you'll have to whatever setups that you think are going to play out. What's going to happen is earnings are probably going to wreck them. Okay, and that's probably going to lead you to become emotional or all those other things that the usual person goes through. So you have to be aware of that. Now, let's have a look also at what's been going on the macro side, for the past couple of weeks, couple of months. If you guys remember back to when we were talking about rate cuts, at the beginning of this year, the market was pricing in 0 rate cuts, right? Compared to the prior year where they were pricing in 9 rate cuts. So the market went from one extreme to another, and now in this uh, time period, there are two things that happen. Number one, corporate America comes out of their blackout season, which means that now companies will start to authorize buybacks of shares. Okay. This is typically post 425. That means quarterly end balance. And then companies usually are kind of looking to rebalance their exposure, or if they have too much cash on hand, what they do is they return some of that cash to shareholders through buybacks, because buybacks are more efficient than dividends, because dividends are taxed to the person who's holding the equity, versus buybacks, which they can buy back their own shares, which increases the stock price, and that's not taxed, right? So a lot of buybacks will start happening. But at the same time, the Fed is going to go into a blackout window now for a month, okay? Because the next time you will hear something from the Fed is going to be during the June interest rate decision, right? And as you guys know, I always like to pull this up every week just to show you how these numbers change, right? So right now, oh, did I not type enter? Okay. As you guys know, this has changed quite a fair bit in the past 1 month, okay? But now it was a 95% chance of a rate cut. This is sorry, a rate pause, and that's still the truth here in May, right? And then in June 18th, remember, so you have literally have like next week is where you'll have that Fed announcement. But remember that this one doesn't really count. So after this, there'll be a blackout window for a little while. And then after that, in June, we'll potentially see the first rate cut. Okay. So now the reason why I'm mentioning this is because this is really going to be what the fixation of the market is going to be for the next 1 to 2 months. Especially in the bond market, you can see that they're kind of already repricing in the possibility of a rate cut, right? Remember when this happened, like 1 or 2 weeks ago, and I told you guys that the market's pricing in a shit ton of rate cuts here. And by that time, we had 3 rate cuts on the table. And then the next week, we went all the way back up because of the trade war, tariffs, and all that. And then now we're kind of going to some form of normalcy, normalization, where we're again going back to a mean reversion kind of view, right? So we're reverting back to the mean. Now, if you look at the July and September meeting, there was a lot more confidence in this spread like 3 weeks ago or 4 weeks ago. But now it's literally a shit show, right? Because you can see the June meeting is quite straightforward. Like the people are still favoring a rate cut. But then once you move into July, you see that the market's totally undecided whether they're going to do a rate cut or a rate pause. And the same thing goes, it's even worse for the September meeting now. So when I'm looking at all this data, the thing that I think about is that the market is really, really pricing in a big chunk of volatility here. Okay. And I think that's the key theme for the next 1 to 2 months. It's high volatility. Now, I know some of you might be confused because you'll be like, but the VIX is like not even, right? It's not even doing anything. It's not even that high. Wait, where's my fucking VIX? Oh, this is VIX, right? And aren't we like back in the, aren't we like, isn't the peak of volatility over? Yeah, temporarily it is. But remember that when the peak of volatility is over, it can also typically bounce back and then come back lower again, right? So remember, when volatility rises, it doesn't do so all at once, right? Just like how price action moves. Usually it's a buildup, a buildup, a buildup, a buildup of things, right? And once that buildup gets blown over, then things cool down. So now the cooling down is happening, but remember the cooling down doesn't happen all at once neither. So that volatility, I expect it to be on the higher band for a little while, meaning for the next couple of weeks, right? And what that is going to do is it's going to cause bigger expected moves in SPX and SPY potentially, right? That's one offshoot. Bigger moves potentially in NASDAQ, right? You may see contracts start to get more expensive, by the way, because of the sheer amount of people that will be speculating. And that's, by the way, another reason why you shouldn't be trading aggressively this week, right? Because remember, a lot of those contracts that you're buying are being also fought for earnings, right? So like if you imagine you're buying a contract that's expiring this week, right? And everyone's speculating on a specific stock. Well, everyone's in there. Their contract prices are going to naturally rise. So you're overpaying for these contracts in the week like this. So you have to be really careful. You have to select the stocks that have chances for a run up. You have to select stocks that have not ran yet, then buy derivatives behind it, right? You can't do the reverse where you've seen something run and then you buy the derivative because then you get screwed. A lot of you tend to do this, and I understand it. You don't have the timing down perfectly, and that comes with experience. I completely get it. But what you absolutely should practice in doing is not buying calls when the price is going up and not buying puts when the price is coming down. This basic thing will save you a lot of money. So if you see a breakout, right, and price is moving up, your instinct shouldn't be, oh, I need to go buy calls here, because you're already chasing higher premiums, right? And then some of you ask yourselves why you're not profiting enough from those contracts, right? This is the reason. It's because you're buying contracts when they're already expensive. So try to buy calls on wave downs and buy puts on wave ups, right? That's the rule, general rule. I know it sounds really like simple and it might be harder to do in practice, but that's just the reality. Okay, now going back to the macro.
Let me just add some color to that real quick, T.
Yeah, go for it.
So, an example for you guys, you know how, I usually buy when things look like the world is about to end. And most of the time, you guys are asking me, like, why are you buying down here? Everything is negative, all this shit, right? Then all of a sudden, things turn around, right? And then everyone starts asking questions like, hey, do you think we can go higher? Can we go here? Can we go here? Can we go here? Right? Remember, when you're buying those calls, you're buying them from people like me that are executing risk at these key areas. And then when that move happens and everybody else decides to get in, we're selling our contracts to those individuals and we're reducing our risk. So when you buy after a gap up like that morning, you're buying that contract from somebody who took the risk the day before. If you're buying puts after the move has happened because you think there's a little bit more downside, that's totally fine. But you're buying that put from somebody who took the risk at the key level. And that's something that you got to remember when you decide to apply risk and you're deciding that this price is a good price and you want to buy it at this price, right? You're buying it from somebody who took risk before you. So something to keep in mind.
Yeah, that's absolutely true. Now, also, let's do a little bit of a retroactive here. I just want to remind you guys that a month ago, a month and 2 weeks ago, this is what the headlines look like. Okay. It's really good to look back sometimes because I think a lot of you require this perspective. So have a look at where we were a month ago. Hedge funds turned defensive amid tariff chaos, selling tech stocks at the fastest pace in 6 months. Wall Street trading desk warned S&P 500 sell-off will get worse. Strategists who called the end of US exceptionalism, oh no, sees no recovery, right? We are still heading into a bear market. America's market exceptionalism isn't coming back. These were your headlines a month ago. Now, I'm going to put together another one when the market's ripping and show it to you guys. Because these are the kinds of shit that makes it really comical and worth doing my job. Whenever you see headlines like this, that is your peak fear, right? The godfather of economics, the grandmother of finance. I don't know what the fuck they come up with these headlines, but this was your peak, right? And that's what was that? What date was this? Let me just see specifically.
Yeah, fuck Tim Walls.
This was March 31st, right? A bunch of headlines came out. That was literally right before the big drop, right? And this was here, right? And then the market proceeded to drop a bit more. And then obviously the next day, they would be like, yeah, see, we told you it's all dropping, everything is going to die. But what came after that is one of the greatest buying opportunities, once again, in the recent years, right? Where the market rebounded very quickly so far, right? Okay. So the perspective is important. Now, next couple of weeks, you're going to see that things are going to be a bit choppy. Earnings are going to be thrown around. A lot of companies will be going up and down. I expect the indices not to really find a specific trend. But if anything, it might move sideways for a week until the major earnings are over. And then based on how earnings do, how companies do for earnings, you'll probably see a little bit of a recovery or you'll see a little bit of a continued kind of pressure down, depending on how these companies perform for earnings. Now, other notable things for this week is that last week, so having a look at the prime brokers report now, which we go through every single week, to look at what the dumb hedge funds are doing, right? We can see that hedge funds actually bought a lot of financials last week. And this is interesting. Well, not that interesting, but kind of interesting because earnings are led by financials. So they were buying into the financials rally, right? But at the same time, if you look at XLF, right? It doesn't look like it's been very bullish lately, right? We still need to climb over the 49.30 level for this entire sector to actually be bullish. And if you look at the macro products here continued, you'll see that healthcare, so healthcare, industrials, infotech, and energy were the most net sold sectors. Okay. Financials and real estate were among the most net bought, and these were actual long buys. Okay. Infotech was the second best performing sector. So let's have a look at that inflow outflow chart that I show you guys, right? So you guys know by now the black ones are the 20-day flow. The 5-day flow is the blue ones. Now, this is a good perspective because it gives you this is the data that the prime broker is looking at. This is not data of the entire market. This is essentially just bigger liquidity players, right? Your hedge funds, your mutual funds, whatever. And so if you look at that last week, there was like only one or two of these on the upside, right? When I showed it to you guys. And now you're starting to see a few more come up, right? In fact, I think last week it was maybe another sector that was the one that was bullish. So what we really want to see though now is the trend start to switch where a lot of these, the lower bars that are black start to become shorter and the blue ones start popping to the upside to show that reversal from the trend going down to up, right? If you see how things are right now, these are all your downtrodden sectors, so to speak. And the blue bars on the up are showing you the improving ones, right? They're getting more bullish and so on and so forth. So here you have utilities in the 5-day financials, but actually one of the ones that are hiding in here is real estate, if you think about it, right? So real estate and financials, and then obviously this week you had a big jump in consumer discretionary as well this past week because Tesla rallied super hard, Amazon rebounded a little bit, right? So you had a little bit of flow into that sector as well. The 20-day flow on consumer discretionary is still negative, but the 5-day flow is super positive, and that's largely going to be driven by Tesla. Okay, all right. So you can get kind of a view of where that money is rotating into. And once again, financials was your most bought sector. You can see that in terms of notional terms. And consumer staples was the most net sold last week. Okay. So that's where you have it on the prime book report. This is lagging data. Do not try to use this data to forecast forward. This is information I'm telling you information of what they did last week. So don't look at the information and go like, oh, that's what's going to happen this week. No, we're looking at what the positioning that they're making, and then we are creating our own plan out of that. Because if you've been doing long enough, you know the playbook almost, the institutional playbook, how they do it. Like for example, if market's coming down, then they're going to go long healthcare, consumer staples, and a bunch of other shit, right? So you kind of know what their playbook's going to be. Okay, now. Well, let's jump into technicals, and then I'm going to hand it off to Andrew right after this. So from a technical perspective, this is basically like the most difficult position to be in as a trader this week. Because remember how I was talking about the range within the range, right? Last week, that was last week's team. We had a range within a range. This was the range within the range. We came down to retest the bottom of the range, and then we rallied, right? I made a boo-boo on one of the trades, and then I recovered both of those trades later in the week. So net for the week, I was flat, right? We live traded, like I think one session was a bad session, and then two of the sessions were great sessions. And I was showing, all people in the live trading session how to manage your risk, how do you adjust your stop loss, all those kinds of things. So if you guys are wanting to attend those, please hit me up. I will do more. I'm going to be doing more of them so you can learn in real time as well how these things kind of break down. And I think it's helpful. So here, your major level still is 5,500, right? The only thing is that we've been consolidating at this level, and consolidation, it can be a good or a bad thing. You don't necessarily know if, for sure, if this thing is going to get rejected and come back down, or if you're going to break out and then start heading up. But there are some indicators that will kind of give you an inkling. And my opinion is that we need a wave down first before we have a wave up. And so from my perspective, I think a retrace back into these two levels. Let me do this on SPY because I know you guys are all watching SPY. So I'll do it on SPY. So for this specific wave, we want a retest of 539.50 in this area, right? Or if they really want to mess with people, they could come all the way back down to 525. Okay. So that would like kind of be in line with our plan that I drew out as a joke, which is now playing out. This was the thing I drew last week and I posted it to you guys and I was like, hey, maybe this could happen, right? So this happened, this part happened, but then this hasn't happened yet, right? The down wave hasn't happened. And the down wave hasn't happened probably because Here is where the flip zone happened, and a bunch of sellers came in providing liquidity, but then buyers bought all of it up and it's now melting the price up, defending it. And that might cause a squeeze or a run. Okay. But it is not out of question for us to get to 525, 525 this week. It is a possibility because that would be major fuckery, right? That would be breakup structure to come down, but then it would still make a higher low in the bigger time frame, right? So that could be something that happens this week. You have to watch out for it. Earnings season, very likely possible. Okay. The bullish scenarios, right? So the bearish scenario is quite simple. You have retrace back into 539, 540. You have retrace back into 525. Those are the two targets for me this week. For the upside, though, right? Then you have like much bigger, breadth. Okay. Upside targets. Your first one, typically, let me just draw my fib on here real quick. Pick up some of these lines. Okay. So okay, here we go. So based on your previous wave, your ideal targets for upside, if you should break 547 and hold this, which I don't think we are going to hold it pre-market, let's see, right? If we can hold above this level, then 555 becomes your next target. And if you can hold 555 and break through it, then your 61.8568 is the next target above that. Okay. So these will be the upside targets and like potential levels at which we want to hit on the upside. But you need validation, you need confirmation. That means that you're going to stay above this level. You're going to keep hovering above it. You're not pulling back aggressively. And then you wait for a bounce. Okay. I don't think that will like really quickly go up like that with volatility being so high. So that's where I'm at with this. Now, other things, IWM. Remember when I told y'all this was a generational opportunity to buy small caps at such a cheap price. Since then, we have moved, I think, close to 10-15% on that, right? Pretty decent on IWM. It needs obviously a lot more to go higher. You might even get another buying opportunity here. It's a possibility. You might see IWM come down again and then move up ultimately. It's definitely not doing a V-shaped recovery here. That's what I'll tell you. And the dollar index also seems to have found a temporary bottom, which is also going to add to that downside pressure risk, right? Remember, more expensive dollar, more expensive stocks. More expensive stocks, less people buy expensive stocks. Okay, so remember that. And then the VIX, obviously coming down here, that's your counter trend to everything. But remember that it doesn't mean that it's down, means it can't go back up temporarily. So if the VIX retraces back up on some BS news or earnings or something that happens this week, then you'll see the entire market probably pull back to give people another entry, create some panic, create some liquidity, and then we can search for the next upside move. Okay. So that's my thesis for this week. Really be careful trading this week. It is not the week to put on unnecessary risk. There are two specific weeks that I avoid trading completely. One is a week like this where you have major earnings. The second is a week where FOMC is colliding with other economic data. Those are the types of weeks where you just tell yourself, I'm not really going to trade that much. And if I'm going to take a trade, it's going to be like a very short one. It's going to be maybe an hour or something, and I'm in and out. Okay. Because you have event risk. All right. So that's mostly of what I have this week. I think that if you're cautious and you're able to protect your capital this week, you'll do really, really well. Okay. So be careful and keep a lid on your emotions. And with that, I'll hand it over to Andrew.
Hello.
Hello.
See, like T's like the serious side, and then there's me. And I just like start my section by saying like fuck Tim Walls. And it's only gonna get more fun from here. So hopefully you guys have been listening over the last few weeks. Let's recap last week. Played out exactly as we expected. So if we go to the playbook, and we take a look at last week's plan, which would have been down here, you can see that, what was the level that we talked about last week? 525, right? And so Monday opened, we opened below 525. We came all the way down into about 509, which was our bearish target. If you guys were in the group, I told you guys I went heavy long there. We bounced off 509. The next pushed up back to 525, broke over 525, which was the flip point, and then pushed us all the way up into the 543, essentially going even higher up into about 550. So overall, it was a good week last week. If we take a look at this week, we can see so far the playbook has only had 2 weeks where it's missed. We can see here it's a $14.80 move, so nothing too crazy. I'm anticipating that we're going to hit both sides of the target. So downside is 535, which T just talked about in his section. Upside is 565, which T said 568. I'm totally okay with that. I have a high of 576, as you'll see when I go through the actual plan. We can see some downside positioning here. So this is Friday's flow. We can see 547, nothing really on SBX. Where it gets interesting is where you look at the whole week. So this is last week's flow, Monday through Friday, expiring this Friday. And as you can see, there is some downside positioning on SBX, which is the main thing that I'm watching, which I'll talk to you guys about the key levels here in a second. So as you can see, some downside positioning. I think a move to the downside does make more sense than a move to the upside, just based on how much movement we've had. But we do have a lot of earnings this week, as we talked about. So you do need to be very cautious, but I am looking for some type of drawdown. As you can see, the NAMO has gotten a little out of control, pushed up into levels that we haven't seen since essentially August of 2024. So you can see kind of that July, August area right there is when we kind of saw levels at this height. So I like to go back and look at the charts and say, okay, well, what did the charts look like around that time? So August, said August 2024. That would have been around this time here. So that would have been kind of before this move would be my guess. So just something to take note of. Again, not a place where you want to be going overly bullish, knowing that the market is a little overextended. You guys saw T's his price oscillator as well, also showing in the red. So something to pay attention to. Now, remember, this is long term. I told you guys this countless times. This does not get affected by day-to-day moves. So you can see that when this thing turned bullish back down here, you've had quite a move from the market. So again, if you're using the Nazi, the way I look at the Nazi, I've heard other people have their own theses. The way I look at it is just a trend indicator. So as you can see, the market is trending bullish right now. So even if there's a retrace, the Nazi won't just turn red. Like it'll still stay green potentially. And that would tell us, right, there's some strength in the move. Going into the sectors, tech led the way last week, as you can see. No surprise there when the market's that strong, followed by consumer discretionary with Tesla and Amazon showing some strength as well in communications with Google's earnings. So overall, good week there. So that brings us into seasonality. So May does usually have a slight downturn to it. So just keep that in mind. Don't be surprised if we do see some downside this month. And June historically is a tough month. So keep that in mind as well as you are preparing to obviously enter some 90-day swings or things like that. You want to be cautious of these things. So with that, let's get into environment. So right now we're in a positive gamma environment. You can see the market has flipped quite a bit. So that usually means you're not going to have as much volatility. Volatility is going to start to come down a bit. If we have a down day or a down week, we could go back into negative gamma. But as it stands right now, we're in positive gamma. Dealer deltas went positive, which means, right, when we have a positive gamma environment and price increases, their deltas increase and they must sell more shares, which is why I call it a sell the rally, right? So dealers essentially are selling shares short to hedge their risk. This is important to know because when you start to look at the key levels, it'll give you an indication as to what might happen. And that brings us into the key levels here. So the main ones to pay attention to right here are 555 and 570. I have them blocked right here so you can see. 555 is the largest level. So like last week, we were saying 525 over and 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 over. 555 is that level this week. Now, 555 is a little bit different because last week, 525 was the week we were in. Those contracts expired on that Friday. These contracts don't expire until 620. So these contracts are not in a time frame of where there's a massive increase in hedging going to them because they have all the way out until 620. But it is important to know that if we get over 555, that dealers are long and they no longer have to sell shares short to hedge. So below 555 could see some downside. Above 555, probably not. Okay. And that brings us to the plan. So the plan this week, last week went exactly as we had planned. If we go back and look, which we already did, at last week's breakdown, we came down into the 509, bounced off the weekly range, breaking through the key level of 525 and pushing up into 543 and higher. That brings us into this week. The first thing to note is that we have 4 mega cap earnings this week. Microsoft Meta on Wednesday and Amazon and Apple on Thursday. That means that anything can happen after hours on these days. That brings us into this week's plan. One, the main level to watch is 555. This is the largest level on on all flow, and dealers are long here, which means if price breaks below or stays below 555, dealers will have to sell shares short to hedge, which aligns with the dealer environment as well as the weekly algo. I'll be watching for a early push up into 555 and a rejection as we push back down into the 543, breaking this dark pool level of $5 billion should drive us down into the 535 bearish weekly target. If we break the range, I'm looking for 523.19, but with earnings, might not happen, so just keep that in mind. If price holds over 555, dealers are long here, and we would be breaking above the golden pocket. That would mean a push up into 560, where we would add buying pressure and squeeze up into 565, the bullish weekly target. Based on the fibs, I would look for a fully retraced wave pushing into 576, okay? So what does that look like? As you can see, there is a wave here. So this was the wave, this is the high, and this is the low. The golden pocket is right here. Okay, which I'll put on the screen in a second. So you can see golden pocket is right here. So this right here is about 555, lines up pretty decently. So over 555, you break the golden pocket. What happens when you break the golden pocket? You usually retrace all the way up into the high. Hence why the arrow goes all the way up here. So if we reject here, which we are slightly down overnight right now, we would look for this retrace, right, back down into this order block, which is sitting right around this 535 area, which is our weekly range. If this were to break, then we would look for continuation down into that golden pocket, very similar to what T talked about in his breakdown, right? So that would be essentially you'd be looking at like a wave. This is kind of your high right now. Your low would bring you down into about this 522 to about 518-ish area. Okay, and that would make sense for a potential bounce there. So that's what I'm kind of looking for. I think we might get bigger moves outside of the range in both situations. I think 575, 576. And then I think down here, maybe in this 522, 518 is where I think price might find its way sometime this week. But either way, keep it simple. Below 555, there's selling pressure. Above 555, that selling pressure is dead. Now, that brings us into why earnings weeks are so challenging. Because, like we've been talking about for countless times, Tesla had earnings. Tesla earnings did not come in great. It was all over social media. Oh, Tesla had bad earnings. Oh my gosh, these earnings were so bad on Tesla. And then Tesla decided to run essentially from 223 all the way up to 285 after earnings was right here. So these bad earnings, and then all of a sudden the stock runs. So you've got all these people, you got politicians, you got all these dumbasses all over telling people that things are so bad Now tell me, does that look bearish to you? No, that doesn't look bearish. It is two monthly candles bouncing out of the golden pocket. So what does that tell you? That tells you that there are heavy buyers in this area. So you've got dumbass politicians sitting on stage telling people, oh my gosh, I feel so good when Tesla stock falls. And then you've got people that actually look at the market saying, hey, this is a great buying opportunity. And because people listen to dumbasses like that, they miss out on opportunities like this. I'm saying this because in a year or 2 years, there's going to be a lot of people bitching and crying about why they didn't buy Tesla. And I've told you guys countless times when the stock is in the golden pocket, you do not feel good about what you're buying. There's no positive news going around. There's no warm, fuzzy feelings when you're making these buys. Everybody's talking about it like the world is going to end. And you have to fight through those emotions to pull the trigger. It's not going to feel good, but you have to make those decisions in order to catch these types of moves. So don't listen to idiots that don't know what they're doing and pulling their cell phone out of their pocket and going, oh my God, Tesla stock's down. Just tell them to shut the fuck up, buy the opportunities. If you're a long-term investor, then, hang on and we just keep doing what we're doing. If Tesla breaks this range, which is essentially the daily 200 moving average sitting right here, there's no walls all the way up until 350 to 360. And if you guys don't know, Tesla bulls can do whatever the fuck they want when they want. Tesla stock can run $60 in a week, in 2 days. Tesla does not have to wait for any bullshit. Can do what it wants, when it wants, how it wants. They just had bad earnings and ran. Like, don't think for a second that the stock can't do what it wants when it wants. So that's my point. Stop listening to these fucking idiots that don't know what the fuck they're talking about. It pisses me off because I'm like, you sit on a stage, you have a big platform, you misinform people, you tell them bullshit, and they think they have some type of power when in reality they have no fucking power. So with that, I'll get into your guys' questions. Lily has earnings, so you got to be extremely careful. I would say maybe 1,000, 900, and then 1,000 for end of the year. Wait, no, that's exposure. Hold up. Do this one. Probably gonna be the same to be honest, though. Yeah, same. 900 and then 1,000. I have a report on Lily though. So I mean that doesn't even matter because you're going off of earnings. So if you go into long term, there's a full breakdown on Lily. Make sure you read it. It's in here somewhere. I'll update these in a bit. I'll update these over the week. I did Lily. I think the target was 1,200. In here somewhere. I don't know. You have to go through it. I know I posted a Lily one in here though. Mm,
I just realized Spotify is reporting earnings this week too.
Oh yeah. There it is. Lily target 975, and I think you're pretty much close to it. Right? Yeah, I mean, 1,000 would be pretty in line. So broke the golden pocket, should go up to about 938. But again, it's earnings. So Doesn't matter. Looks like a big bull flag to me though. So wouldn't be surprised if it rips off on earnings. What's the name of the long short indicator used? QQE signals. QQE signals. Yeah, I mean, if you're forever on it, I wouldn't worry. What you just said about the golden pocket, when you come down to it, what time frame is best for buying for short term? Short term, I would say I like the 4 hour. I don't know if that's short term enough for you. 15 minute. I would say if you're probably trying to like day trade it, maybe. I have a 15-minute indicator on my Discord that I use for alerts for people. But like I think if you're looking like this is like a 15-minute wave here. So I think 15-minute would be maybe a short term time frame that you could use. That'd bring it down to about 546, 545. I think maybe. So 15-minute, possibly. Long term, I like long term personally better. I like 4 hour daily and weekly. It's usually what I look at. So like if you look at Baba, which is one that just happened, and you go to the weekly, there's a breakdown. You can see how that kind of played out. I'm building a second server, which again, nobody has access to, but I've been working on it mainly to help me follow things. So like here's my China section. And so you can see that like we had the first breakdown of Baba down to the golden pocket, and you can see how it came down into there. Now we're looking for the bounce up to like 136. So if you bought the golden pocket, you essentially already caught, literally bounced right off of it. You caught a $27 move, or it's sitting at 24 right now. So I like longer time frames for those that are not connected to me versus shorter time frames. But 15-minute, I would say you got to play with it a little bit, see what you like. QQE signals just gives you alerts on basically candle structure, and pretty sure it's candle structure. I use it in coordination with a lot of other stuff, so I don't just follow it blindly. But it just gives you indication. I think longer time frames are again stronger than shorter time frames. For example, like I have it set up on SPX on the 4 hour candles, and I actually track it in this channel right here, and it gives alerts. There it is in the SPX 4 hour trend, and you can see the strength of it. So here it was alerted short on 4-4, and you had a 296 point fall. Here it was alerted long, you had a 227% move or 227 point move. So um, it's pretty consistent, but again, I use it on longer time frames, not shorter time frames. So I think happens pretty consistent though. You can see the strength of the moves. Like it was alerted at the close of this candle, and then obviously, 2 candles later it came down. Alerted at the close of this candle, so you would have caught that move or the retrace. Alerted at the close of this candle, would have came down to here. Alerted at the close of this candle, the next day gapped up, right? So you can see, there's some consistencies within it. Again, I like longer time frames. So just using that as a benchmark, right? You go in, you look at the daily. Well, the daily's long. So that's, something you want to pay attention to. Look at the weekly. The weekly's turning long. So if you look at short, I mean, the weekly went short here. Obviously, you had all of this consolidation. And then obviously you broke that structure and you had this huge sell-off. But now you're getting long here, right? So, is the bottom in? Who knows? But again, it's just one piece of information that helps. But again, if you look at the monthly candles, these things are extremely bullish looking. I don't know. Does that look like a depression to you? Maybe. I don't know. I wasn't around during the depression, so maybe that's the depression candle that I keep hearing from all these politicians that are telling everybody, hey, Trump's going to put us into a depression because, tariffs and shit. And then we see stuff like this and we're like, I think you're a fucking idiot. But hey, you keep doing what you're doing. Fucking morons. I told you guys, if you guys start pinning this shit against Trump, everyone's gonna have to eat their fucking words when we hit all-time highs. Because you're gonna look like fucking idiots. Because the stock market doesn't give a shit if it's Trump, if it's Biden, if it's a rock. Doesn't fucking care. Stock market does what the stock market does.
100% agreed with that statement.
Not day traded. I'm talking about a month contract or a week. A month contract or a week, I'd go longer time frame. 4 hour at least. Look for consistent. Again, you're looking for consistent profit wins. I'd also say, compare it to the longer time frames as I do in the playbook. Right? In the playbook, I do weekly, daily, and 4 hour. So it's broken down right here. Weekly, daily, and 4 hour. So as you can see right now, weekly's long, daily's long, 4 hours long. Again, I want to pull back, but that could just be setting up a bigger move to the upside, right? Like, we don't know what's going to happen. So, but that does not look bearish to me. I don't know about you guys, but all these people talking about like the collapse of the economy and shit. I'm like, maybe doesn't look like it yet. But I would love a pullback. Like, imagine a pullback here, right? Like what T was talking about. If you get a pullback here and you get another, right? And the buyers are starting to come in, like those are great buying opportunities. So I told
Oh,
you guys, 90% of people are going to miss the dip. Like,
I forgot to
go
mention
back to the
something.
last time. Look at last time when we bottomed. I'm not saying this is the bottom, but it never came back. I told you guys this. It gapped up and it never came back. Remember all those stupid fucking furus that are like, hey, you gotta go fill the gap. We gotta wait for the gap to go get filled. And then once it fills the gap, we just short it down to the gap, because gaps get filled. And, every gap has to get filled. There's this gap down here at 4,200. So we got to come down. We got to get this gap before we can go higher because, if we don't get this gap, then we can't go fucking higher, because, gaps have to get filled. So we're going to buy puts 3 years out for 42.40 because depression's coming and we're gonna go fill this gap.
3 years out. Yeah.
And then we fucking run. Like,
Oh,
I don't like
God.
just fucking dumb shit that you hear. So it's like all these people fucking are morons and they miss opportunities. So you got a gap here, you got a gap here. Like, you get you got a gap here. I think that gap might have got filled. But again, right? Like, so you look at these things and you're like, okay. And then you look at the longer time frame and you see stuff like this and you're like, maybe I missed the dip. Not saying you did, but I'm saying 90% of people have missed the buying opportunities because they're so scared because of the bullshit that's put out by media and these politicians that are trying to push an agenda that people get scared. They don't want to acquire quality companies because they think they have to fall further. Like Tesla had bad earnings. Everyone's like, why isn't Tesla falling? Why the fuck would Tesla fall? Like everybody knew the earnings were going to be bad. Like it didn't take rocket science to figure out that they might not have the strongest numbers. So, and then you got politicians pulling phones out and talking about they get happy when the stock falls. I'm like, well, good. I get happy when the stock goes up, and you look like a fucking idiot. Goes both ways. So you're gonna talk shit about my stock while I'm losing money, then I'm gonna make fun of you as much as I fucking want. Piece of shit. I hope all the snowflakes lose all their money while I make all of it. Could care less what all those fucking idiots think.
I forgot to mention
All
that
right.
this next dip that is going to come when it does come is likely going to be the last like legit price to enter for the long run.
Oh yeah.
Yeah.
Your hope is that it's a liquidity sweep. Your hope is that it comes down and they liquidity sweep this. Are you going to get that? Probably not. You're probably going to get a higher low and then into all-time highs into the back end of the year. And if these mega cap earnings come in strong, I mean, what's the narrative going to be? Because everyone was like, oh, all this is going to put pressure on these companies. They're going to lose so much money. These earnings are going to come in bad. If the earnings come in strong and they don't have any guidance as to how this is going to affect them and they guide up, I mean, with potential rate cuts into the back end of the year, uh, I don't know, guys. Seems pretty bearish to me. Like, oh God, people are so fucking stupid. I can't. They was talking about gaps today and being the sole reason why everything has to crash. Tay's a fucking idiot. Apple to $100. He finally moved up something, at least made it feasible. He used to say in the 20s. So, this is going to be an interesting week. I agree with T. It's a week to probably sit on your hands. Earnings are 50-50. They can go either way. And here's the shitty part about when you have a lot of mega cap earnings is they can split, right? So let's say you have, Microsoft and Meta, and Microsoft is bullish and Meta's bearish. Well, then the market's probably going to be flat, and then it's just shitty, right? Or they're both bearish, right? And then the market drops, or they're both bullish and the market rises, right? Or they're bullish and then the next day Apple and Amazon are down and then the market's back to flat. So there's just so many things that can happen this week that, if you're swing trading, you want to be extremely careful because you just don't know what's going to happen. And if you don't have the funds to just gamble like that, then it's better to just sit on your hands. There's a lot of really good sports to watch. So if you guys need something to do with your time, you got NBA playoffs, you got NHL playoffs, you got baseball season. Just a lot of things you could do and not sit and watch charts all day. So be extremely careful going into this week. It's not a week where you want to, be gambling short term overnight. But again, I still believe buying quality companies at great prices. Microsoft is at a great price. This is the target I had for Microsoft for those that have, bounced right in the golden pocket as expected. So again, this was a great buying opportunity. I know a few of you guys in here took the advantage of it. Um, again, if this has good earnings and goes back into the highs, like see ya. What what is your excuse, your complaint going to be? Literally bounced right off the high again. So like I don't I don't know what people are, you know, crying about. Maybe we go further down, maybe we don't. Either way, great buying opportunities that passed. We'll see what happens with these earnings. Kings just scored again. Yes. Um, sorry, I played hockey like my whole life. So yeah, so Netflix has already proven it, right? It's in price discovery. So here we go. One mega cap. Tesla had earnings. It's having a strong performance after earnings. So you can see it bounced right out of the order block. Right out of the order block. Came down into the order block. Buyers stepped in. Earnings happen. And now it's in price discovery. Only way I'm shorting Netflix is if it comes back down below this kind of 1050-ish area. Other than that, not touching it. And look how they baited people into a head and shoulders. Right? Like they do this shit all the time. They'll just set you up and then they'll ream you. So be careful. Be careful out there this week. I posted all of my long-term charts for the month, I think in both Discords. So posted them in here on T's server. So you guys have access to all of them. So these are all for the May targets. I'll still work on some more, and then I posted them in my server as well. So, all right, guys. Well, that's all I got. Should be a fun week. Should learn some stuff here about these mega caps. We'll see what happens. Moral of the story: watch 555 and don't listen to Tim Walz. He's a fucking idiot. All right.
I'm gonna go ahead and stop the recording right here.
That's all I got anyway, so
Yep.
works for me.